working with Julian Patel, and we were shooting some ideas around because writing GMI, we found that, and had never realized this, that gold just follows with a month's lag financial conditions. And financial conditions leads liquidity, leads crypto, leads all of the other things. So gold is kind of living in current financial conditions. And we classify financial conditions as the dollar, rates, and oil.
Raoul Pal has shared his thoughts on the cryptocurrency market's current situation. He has proposed that monetary and structural changes might soon coincide to give Bitcoin a sizable upside potential. One of the main themes of his analysis is his belief that real interest rates will probably decline soon. Additionally, he thinks that this decline is likely to happen. In general, non-yielding assets like Bitcoin become more attractive when real rates decline because holding them has a lower opportunity cost. One example of such an asset is Bitcoin. Pal is closely monitoring the performance of the top Bitcoin exchange-traded funds, ETFs, at the same time because he thinks they might be serving as catalysts for the increased inflow of capital into cryptocurrencies. Stablecoins, a crucial liquidity tool for the cryptocurrency economy, are making headlines at the same time. They currently hold a record amount of approximately $236.6 billion across multiple platforms. There is a huge amount of dry powder being prepared to enter the market, as evidenced by this surge, which is marked by an increase of $2 billion in just the last week. In the past, spikes in stablecoin reserves have happened before notable increases in both Bitcoin and other cryptocurrencies, serving as a liquidity signal that shows big investors are ready to make large investments.
Somehow it feels to me that liquidity needs to be injected directly into the bond market. Somehow it feels like there's a liquidity problem in the bond market that's stopping the usual buyers being able to buy.
Well, I think the change in banking regulation would be, in effect, injecting liquidity directly into the bond market. Yeah. But the Fed cutting rates is also injecting liquidity into the bond market.
Yeah, they've been dragging their heels. They're so slow. I mean, you can see the forward-looking inflation stuff is falling and growth is slow, yet Jay Powell doesn't want to cut rates yet.
Well, paradoxically, now they almost cannot, because there was so much political pressure on them to cut rates that they almost can't. It's like this stubborn, persevering child. When the parents tell them you have to go 40, and they were like, no, I don't need to go 40.
Yeah, true.
And I don't even know which side of this is being the stubborn child, by the way.
No, exactly. Maybe both.
No political statements here. I'm just saying that there is a little bit of that dynamics going on now, that how it seems like very logical, would be pretty logical for them to cut rates in May. But it doesn't seem like that's happening.
I don't know. Let's see how the economic data comes out. I feel like
it would be an outlier. It would have to be probably an outlier development of situation for them to cut rates this time. But it could happen, but it just seems to be slightly unlikely right now, because I feel like the credibility will be weakened if they do in their mind.
What's your favored trade on the macro side currently? And obviously that can change over a week or several months or whatever it is. Is it tips or is it rates outright, or what's your favorite bet?
Well, I love long duration anywhere on the curve. I do have right now. I do like tips because they're just really underperformed, and they, especially long dated tips, and they really kind of cover all possible scenarios: high inflation, low inflation. It's a kind of trade that works in a broad range.
Yeah.
So in the interest rate world, long duration, but honestly, being long like red Eurodollar, See, I am so old. I'm saying still Eurodollars, SOFR futures, right?
I still can't get my head around SOFR futures. I just think of Eurodollars.
Like being long the reds, it seems to be not a bad trade, because I think there will be more cuts than projected in the market.
The reds is which year or which?
Well, it's like 2026 kind of scenario.
Yeah.
Just think that the next 12 months, there will be more than 100 basis points of cuts.
Yeah, I
think
agree.
About this way, right? And then, and I do think that's the case. So there is a lot of space there for, you could get a pretty big deal if they cut to zero. That's like still 300 basis points to go.
And do you trade that via options, call spreads, or just straight outright?
Well, it depends on vol. You could do it outright. You could do option structures if you think vol is low. Recently, vol has come up, so it's harder to trade options. But if you could do it through spreads if you want to reduce the vol, but of course then you have a lot of bid offers. It's more like I don't have like a strong right now advice on this is how you should structure your trades to people. But I'm just saying something with this thematics is pretty good in the interest rate world.
Yep.
In the current, but there are trades in other worlds. In the currency worlds, I think yen still has way to go in terms of appreciation relative to other currencies.
The yen appreciate.
Yen, yeah.
Yeah, I agree. I'm looking at the yuan yen chart, which I think is one of the most important charts in the world. And it's a beautiful head and shoulders top that suggests that the yen needs to strengthen and the yuan can weaken somewhat.
I definitely like both legs of that trade.
Yeah.
And there are some other currencies. So I did like in the currency world, I would not like so much bet on the dollar just itself as I would look at various currencies which are very expensive and various currencies very cheap. Like, for example, Swiss franc is very expensive. Yen is still very cheap. Chinese currency is kind of hard to tell whether it's expensive or cheap, but given the interest rate differential and like policy divergence at the record, it seems like it could get cheaper.
Yeah, and it doesn't seem like they will allow it to cheapen against the dollar, but they really want it cheaper against the yen because the yen has been so weak and they're export competitors.
Right. And so it kind of like it's probably not going to be like, it's hard to see if there'll be catastrophic devaluation, but this kind of grind of carry plus maybe slow depreciation probably is going to be happening in China. So there are like what I'm saying in currencies, there are pockets of things you can do, pockets of buying things which are cheap and selling things which are expensive, which seem to make a lot of sense in the long run. Again, I'm not going to be like super specific about, oh, you have to do all of this and options, but more like just, I think good themes are short, long yen. If you want to be long dollar, I would probably you could balance it with some hard assets, and hard assets have been doing really well. I mean, I really don't know how to puzzle the gold performance fully. I mean, of course, like it's easy to, given like various things that we discussed, to attach a narrative to gold, but I have to say gold a little. My target on gold was 3,000. It a little bit surprised me by going to 3,400. I had like a 3,000 target on gold since like 2011, right?
I tell you what I found. I was just working with Julian Patel, and we were shooting some ideas around because writing GMI. We found that, and had never realized this, that gold just follows with a month's lag financial conditions. And financial conditions leads liquidity, leads crypto, leads all of the other things. So gold is kind of living in current financial conditions. And we classify financial conditions as the dollar, rates, and oil.
With a 10% increase in value over the last week, Bitcoin is showing renewed momentum and is currently trading at $93,000. The fact that this move follows a notable technical recovery from a key support area suggests that the current trend is more robust than it initially appeared. But unlike earlier rallies, this one seems to be bolstered by substantial capital inflows, particularly from a greater use of stablecoins, rather than just speculative momentum. With investors showing a strong desire to push past resistance levels and capital building pressure being sidelined, the market sentiment seems to be resolutely bullish. This general optimism in the market is also helping other cryptocurrencies. The likelihood that the cryptocurrency market as a whole is about to enter a new bullish phase is growing due to their 16% value increase, which coincides with the rise of Bitcoin. From a historical standpoint, capital often moves into alternative cryptocurrencies when the price of Bitcoin starts to level off following a significant spike, a phenomenon known as alt season. In light of the growing liquidity and heightened enthusiasm, the upcoming weeks could be pivotal in determining whether or not the cryptocurrency market will undergo a full-scale rally.
So it's a dollar. So you're saying that financial conditions, looser financial conditions lead to higher gold?
Yes. And it's pretty decently highly correlated. It's obviously not.
But financial conditions are not terribly loose right now because of the higher rates and the fall in the stock market.
It's the dollar. No, forget the stock market. That's a lag. The one we use is just three variables. And it has the highest correlation, has a 97.5% correlation to the NASDAQ, all of these things. And it is the dollar, rates, and oil. Now, rates have come off a tad this year after going up a lot last year. The dollar has obviously had one of the fastest moves in the shortest period of time we've had in the last decade and a half. And that's really moved financial conditions. And oil obviously came down quite sharply as well. So financial conditions are loosening quickly. And gold seems to be just following that and has done for the last decade.
Well, I would be careful of there's not being what I call a tautological correlation. Because gold is clearly correlated to dollar because it's gold denominated in dollars. What I would like to look at gold and euros as correlated to dollar.
Yeah, so we looked at the correlation of them individually as factors, and we found combined was better than individually. So anyway, that's my current thinking is, and I'll write about it this weekend, is it's to do with financial conditions.
Or you can just say that there's more buyers than sellers.
That's true too.
But there's clearly more buyers and sellers of gold. What is interesting, gold mining stocks were doing well, but lagging gold performance. And silver is lagging, and platinum is really lagging.
Yeah.
And my experience with platinum and palladium is that you just have to be patient, and one way or another, platinum will go to 3,000 as well. But you have to be really, really patient. It's like a decade-long trade you're talking about. But those trades, however, do give adequate return on capital. If you bought palladium in 2003 at a couple of $100, you would have watched it go to like 3,000 almost 3,000 over the course of next, 15 years. And it would, I don't have like the exact years right now, and it would be a really good return on capital.
Yeah, the annualized return over time would have been fine.
Yeah, so this strategies of trading the platinum palladium complex have been yielding good results. You just have to be extremely patient. And silver, I think silver has space to go, obviously based on historical patterns. So, and cryptocurrencies obviously have space to go. I don't have like as you know, I'm not a very passionate about like hyper Bitcoinization or anything like this. It's more like just look at the historical charts. What are the ranks?
Do you trade it for the fund, or do you just hold it yourself?
I can trade it for the fund. Yes.
Right.
I don't like discussing my specific positions, but I definitely have the availability to trade it for the fund.
But you have the ability to, or you hold it yourself.
Yeah, so I have the ability, and I can express the pros and cons that I see on crypto as much as on gold or silver, right?
Yeah.
Like I can tell you the big picture of what I'm thinking about there. But what I'm saying is like being long dollar against something versus like China could be offset by, if you have the appropriate view, by being long hard assets.
And what about the commodity complex like copper, stuff like that, which is a trade that's on everybody's radar screen? And also, what about equities?
So for me, copper is an interesting trade because it's a trade like it's one of those trades that I'm fairly confident that if you go see through all the cycles, see 10 years forward, I think copper has much higher to go, because I don't think they will cancel electricity. And I don't know if they will have transmit all the electricity through microwaves beams yet 10 years from now, but the need for electricity is increasing, and I think they probably will need copper. In the next upswing of the cycle, copper could go probably higher in price. And meanwhile, however, the counterflow is that if you do think of like China slowdown and global cycles cyclically, there could be some headwind to copper because it's an industrial metal, has a strong industrial component.
So you'd rather buy low, sell high?
I'd rather buy low and sell high, yes.
And equities, any strong views here or not really?
I'm leaning negative on equities. I've been negative equities for a while now. Probably I don't like being overly short stock market.
No,
It's a very, I think, for
we've
me.
all learned that lesson.
But you know what? However, I remember there was a convention, some kind of investor convention around 2018, I think, maybe like even before that big correction in 2018, right? And I remember I was giving some kind of presentation. I was in front of 100 people or whatever, 200 people, and asked them, hey, raise your hands if you think that within the next 5 years, you have better than 90% chance of buying stocks significantly cheaper than they are now. And almost every hand went up. And I was like, then why you long?
Justin Sun, the founder of Tron, has recently returned to the public eye and made a controversial statement regarding TRX, the native token of his network. In a recent post on X, formerly known as Twitter, Sun referenced fresh data from Into the Block. These statistics showed that out of all the major cryptocurrencies, TRX now has the strongest 30-day price correlation with Bitcoin, outperforming even Ethereum and Tether. Although TRX's correlation with Avalanche, AVAX, is 0.16, it has a 0.37 correlation with Bitcoin, which led Sun to boldly assert that TRX equals BTC. Despite its symbolic nature, the statement emphasizes Tron's developing ecosystem, which has grown significantly as a result of initiatives like the USDT stablecoin's network expansion and the most recent development push through Seedon. Whoa. Furthermore, Sun does more than just make technical claims in their aggressive marketing. He recently decided to attend a private dinner with former President Donald Trump, spending over $14 million in true MP coins. The cryptocurrency community has been talking about this decision. Sun is currently the most well-known owner of the True MP token, which supports his plan to maintain his prominence and influence in the sector by using high-profile events and risky financial moves. In the unstable realm of digital assets, his actions reveal not only a well-considered investment but also a strong sense of branding.